Good morning, traders. Welcome to Beyond Profile. Today is March 1st. March 1st, already a new month as we roll over into March. Say goodbye to February. I want to start out by looking at crude oil here this morning. Crude oil had broken through the prior value area that we had established for nearly almost 3 months here. We had gone below it, and now we're on the top side of it, doing a little bit of what I call a change of polarity here at this 96.50 area, and looking a little bully even this morning again, and looking for continuation. Once we stay outside of this value area here, we're looking for more upside potential in the crude market. If it pulls itself back into the shaded area, then it pulls itself back into the prior 3-month value area, which is this 89 to 97 area here in the marketplace. So crude oil today, we're going to be continuing to look for long opportunities, pre-market 97s to 96.50s even, buy them on a pullback is what we're looking for in the crude oil market today. The S&P market here this morning rallied really strongly in the overnight to 36 area, has pulled back here as we're talking and building this video at this point. Back to some areas that we're really looking at getting long and looking for continuation. You know, you have to look at this market once it bounced off of this prior value area, off the 1295 area. You know, it's been vertical, it's been straight up, and there's been a strong imbalance. There really hasn't been any stopping points, if you will. And for the month of February now, if you looked at this box right here, represents where the high volume areas were for the month of February. And where are we at? We're still higher. You know, we're going to go back up and challenge these prior highs. And as a matter of fact, I wouldn't mind seeing the market come back here off of these 19s one more time. Hook maybe a higher low against the monthly point of control value area from February, and then take off again. Remember, the longer that we establish a value area up here, the more probabilities that we will have of going continuation in the direction that we've come from, and that means that we still got what? More upside. As much as we may not want to think that or believe that about our economy and what's going on, the perception here still is that things are getting better and price action can continue to rally even higher. So what we're going to have to watch for over the next few trading sessions here will be, is as far as the S&P is concerned, is do we generate some larger value area where we begin to auction back and forth in. Maybe it's a matter, like I said, we come back to the high volume area from the month of February, come back into here, put a higher low in before going up and making new highs. All right. So that would be one scenario. The other scenario obviously would be is if we continue just to run right straight up today and we continue to make new highs. You know, back up and challenge the prior highs from a couple Fridays ago when we were up at 1343 area. Talk quickly about the bond market, the 30-year bond market. We were back at the prior pivot highs up here, and you can see this morning we're actually gapping down. We're back inside the value area. And we're actually closed outside of value for the bond market as of yesterday. The point of control in the bonds are way down here at the 17 level. And we're opening with a gap down this morning in the bonds, obviously, because the equity markets are higher this morning. Would be looking for some sort of a rally to short into. The other day when we were shorting these highs and we took a little bit out of the markets, these 1907s area, you've got this gap here that I'd like to see the market come back down and hit that settlement price of 1907. So that would kind of be the short-term target, if you will. Bonds today on a rally, if the markets are going to continue higher, I would look for them to get short. We can go ahead and look to get short and play this value area back in through this system here, because we've got to the unfair highs of that 3-month balance area, and now we found responsive sellers at the unfair highs, and with the gap down, it's just kind of adding pressure, if you will, to auctioning back through the range. All right, one more market. Let's take a look at the euro. Okay, here's the daily euro chart. We're back at the prior highs from the end of January and stalling out here just a little bit. It seems like that 38.50 number beginning to cause a little bit of supply coming in, and responsively we have sellers up there at that 38.50. Every time we've gone up there yesterday and even in the overnight session, we had some supply come into the system. So a lot of people are looking at this, you know, a 2x top, you know, and if it holds here too long and forms a very shallow retracement, this will be a continuation pattern for the markets to actually break out and continue higher. We've had a longer term target on this anyways back at the 40 area. So watch for consolidation at these highs because everybody will get loaded up here on the short side looking at this prior pivot high, and if it doesn't pull back very far and we consolidate there, that's a clear sign that we're going to break out and rip through everybody's stops. That will create a panic as stops are getting taken out from all of the people who shorted there. The breakout buyers will jump all over that, and you'll get a nice imbalanced state to new highs in the euro. All right, that's our morning briefing. You guys have a great day, ladies, and we'll see you in the room. Have a good day, everyone.